Welcome back, everybody, to Be the Trader. Today, I have a very special guest. I'm excited to bring on Brian Lee. Brian, welcome to the show, my man.
Hey, what's up?
How you doing?
Doing well. How about you?
I've been well. Been well. Just got done recording an episode of today's trades. The market was starting to pick up today, at least for me. I don't know about you.
It's been pretty good. Recently, there's a lot of crazy momentum just for no reason, feels like.
I know, right? Like we have MYOV, and what was the starter of that? I think it was yesterday.
KRTX.
Yeah. Oh my gosh, man. What was that from like? I don't know where it started, but it's like in the hundreds now.
I think it went to 150 at a
Oh
point.
my gosh. And it had a fake out today where it went red and then squeeze and now it's red.
Yeah.
It's crazy, man. It's crazy. Well, I appreciate you coming on the show. For those of you who don't know, Brian Lee is a consistently profitable trader. He's someone who started off in the gaming world, which we'll dive into here briefly. But if you haven't heard his previous episodes where he actually got interviewed with Beyond the PDT, definitely check them out. They do a good job and they dive into real deep into Brian's background. But Brian, just for those who haven't listened and they don't want to go back to that podcast, just give us a quick, rundown of, what got you into trading.
Okay. My name is Brian. I am 27 from California. Um, Originally, in my early 20s, I was a professional gamer. I played a game called Dota 2. If you're familiar with teams, probably the most popular team I was a part of was called Team Liquid. And basically, once I decided that I no longer wanted to pursue professional gaming just because it took a lot of time and a lot of travel and I wanted to do other things, I kind of had a little bit of a nest egg with some of the money that I've won from tournaments and from just competing. And I've always been interested in the stock market. So while I was transitioning out of being a pro gamer, I was looking into how do I invest this money? How do I compound it and make, a new career for myself, something kind of similar. Since I was used to not really having a traditional job, I wanted to do something I could make money from home or just have my own schedule. So the stock market kind of lined up with that. And then while I was studying, I just put all my money into an account. I started over PDT, which was pretty lucky for me, and just took it really slow. And I kind of blundered my way through the first year, and then eventually I got to short selling, and then I kind of found my niche. And then ever since then, I've just kind of been perfecting that and just working towards it. But I've always been very focused on risk, and that's kind of allowed me to learn a lot of lessons and kind of get to the point where I'm able to become profitable.
Yeah, and you actually, and correct me if I'm wrong, don't you have an experience where you were just pretty much doing a great job, killing it, but didn't really have that risk management, and then kind of had an experience that most of us don't want to have, and then you've been able to grow from that?
Yeah, back in last year, I actually had a really great, profitable, like 300% of my account kind of run. And I always have been about risk. Like I do take high risk reward setups 3 to 1 at least, where I'm generally pretty good about cutting my risk. But uh, a lot of like emotions came into play last year where my dad passed away. But I was it was more due to the fact that I was compounding my account, which means that like every single time you take a trade, um, you're basing that on 2% of your total account value. So for me, as my account grew and grew and grew, it was harder for me to deal with larger share counts and larger dollar risk because I wasn't necessarily prepared for that. And when you start taking larger positions, you have to deal with things like liquidity issues where when I was used to cutting for 1R, you might be cutting for 1.25R, 1.5R, and that kind of skews the risk reward. And you don't really know where to kind of put a pin on it. And then eventually I got into a situation where I broke a rule and I averaged up, averaged down, whatever it is, onto like a very parabolic stock that I was heavily short biased on. And when you average down, you have to like exponentially increase the next um, ad, which means that because otherwise you're just putting yourself further in the hole. You want to increase your average. And so I basically got away with that once or twice, made a lot of money on that. And because of that, it built a bad habit for me where I was willing to bail myself out of situations instead of like, eating the loss, which hurt at the time. And then because of that, the one time it doesn't work out, that one basically blew me out of the water. No pullbacks. It was one of those runs where even to this day, I think one of the tickers was WATT back in January, February. It was this ticker that just never ever came back to the price. So it's lucky that I did cut it where I did, but it wasn't really my choice. I got stopped out by my broker. Probably would have been able to get out break even at the end of the day, but they have different like risk management situations that they have to deal with on their end to guarantee that the money is deliverable. So if I wasn't able to wire in the money, then they would just cut it off right there and basically filled me at the exact top, which was really devastating back then. But ever since, I really understood that the main reason why that situation even happened is not because I wasn't aware of risk or bad habits like averaging down, but it was more to the fact that I didn't have any risk controls, which was for me right now, it's just having a max loss with my broker, max position loss as well. And what that basically does prevent you from doing is when you go against your max loss, it won't allow you to enter a new position, which means you do not have the ability to average down. And at worst, you have slippage. You could take like 3, 4, 5, 6, or God forbid you take 10. But you can't lose your entire account. And for me, like even in some of the worst case scenarios where I do lose, if I would lose 10R, that for me could be like 3 or 4 days. I can recover that pretty quickly because of the nature of risk reward. So it was all about the fact that like if you have the temptation to bail yourself out, that can lead to disaster.
Oh yes, it really can. That's what happened to me recently. And you actually told me that I need to probably put a hard, no, stop loss, because I always do that, but more of a with my broker where you can set an actual stop, which you were mentioning earlier, and I did that immediately, so that way that does not happen again.
Yeah, I think if I had that from the very beginning, I would have been way further along right now, because I don't. That's the thing about Twitter, is that nobody talks about risk, and that's why, as I understood and learned more and more about myself, like I didn't have anyone like mentoring me through that process, so I had to really go through all those pitfalls. And now that's why everything I talk about now is just about how do you stop that 1% chance that you have a really big mistake. I mean, even if you're the most disciplined person in the world, if you have a day where something's not going right, or you didn't get enough sleep, whatever it is, if you're off emotionally from just being totally grounded and you make a bad decision, you don't want that to be a possibility for yourself. And having a max loss, it's like such a simple thing, but I feel that it's very, very important, and it probably would have been the most important lesson I learned back in 2018.
Yeah, no, I can see that, and the whole thing about, and first off, so I'm sorry about what happened to your father, and I can't even imagine if that happened to me. I could even, so I can't relate completely, but my condolences to you. What I will say is that coupled with trading and emotions, like you were mentioning earlier, when you're hit with emotions and you're not focused on the right, process in trading, what I've noticed for myself, and it sounds like you're saying, you could be disciplined for months, and then that one day you hit WATT or KRTX, and you just get blown out of the water because revenge trading starts happening and you start fighting it. But because you set this max loss with your broker, and that lesson you've learned that you've been able to pass down to me and potentially other people, it could help us from not experiencing those that big that big loss.
Yeah, 100%. Because one of the books that I read that was really, really amazing as it relates to trading in a lot of ways is Atomic Habits by James Clear. And in that book, he kind of talks about like using systems instead of just going by your word, because when it comes down to it, like if you can create a system, which is in this situation is putting a max loss with your broker, it's like you've predetermined an if then, like if I hit like $1,000, then I want to be stopped out for the day because I'm not thinking right. I'm thinking about revenge trading. I'm thinking about being emotional. I'm thinking about bailing myself out of the situation. And you've kind of like created that contract with yourself. And so that you know that even if the worst thing happens for you, when you were sane of mind, you know exactly like what needed to be done to prevent yourself from feeling like you could like fight a ticker, because that's probably the worst thing you can do. And so I always try to create like ideas of how I can make things more concrete, like take it out of my hands, put it into a system, into the computer, whatever it is, to prevent myself from myself. Because we all know that as traders, when you go into a trade, the best time to plan the trade is like before you're in it. And a lot of times when we're impulsive and we just hit the bid or whatever it is when you're shorting, then you decide your risk and price target after the fact. Those are not good trades. It's usually when you can say like when it hits this resistance level, this is when I want to get involved, this is what I want to risk, this is my price target. And as long as you can stick to like your systems, take the human element out of it, that's, in my opinion, that's the best way to be successful in trading, because there are like so many ways to lose money in the market, and the only way that we can like become profitable or be consistent is just by following what we say we will do and making it systematic.
Yeah, absolutely. The system itself, it's what's helped me become consistent, but then you hit it on the head. What makes me take setbacks is whenever I break those rules or break that system. And it's like, what's that saying? It's easy to make money, but it's hard to keep money.
Yeah.
And it is very hard to keep it because especially every time I put in an order, like you said, like you mentioned, if you place an order really quickly out of emotion because you see something without really pre-planning, those normally don't work out. And most of the time, if not 100% time for myself, they don't work out when I do it that way. I was curious on the PDT when you mentioned, you started above the PDT. I personally think now looking back when I started above the PDT. Well, I was under it for like, I would say like 2 weeks. And I said, what? Why am I under this? So then I just uploaded money into it. I think it is, and I want to hear your opinion, but I personally now think that it was a mistake for me to do that. I actually think that people who are under the PDT are more picky because they can't trade often. And so they take their time and they learn that patience because they're forced to. But at the time when I was trading, I obviously didn't see that. I thought I can't trade. But what are your thoughts on that?
Well, I guess my overall opinion is that I think PDT shouldn't be in place, just because in my personal trading, it's just like you might as well have $0 if you're at 25K, which doesn't make any sense because it's a lot of money, and I'd be able to grow my account a lot more if I didn't have that consideration. But overall, I feel that it comes down to the trader's education, because and I know it's easier said than done, but if you had someone who had experience who could kind of guide you, mentorship, whether it's paid or you had somebody who's been through that, I feel that being over PDT is much better, because then you'll have the best practices in mind. But I feel that, for a complete beginner, somebody who is maybe a little bit stingy, who doesn't want to pay for education or can't find somebody who's able to mentor them, that it can be very dangerous, of course, because now like you might average down in your first couple months of trading, then all of a sudden you lose your entire account. Things like that. Like you could have easily avoided that with just one simple tip. Or you might be trying all different types of strategies. You might not, and this is the most important thing I think, is you might not have learned how to position size. So like I think when I first started trading, I was like, well, I'm gonna risk like $1,000. I'm trying to make $1,000 like that, like just 1-to-1 risk reward. And like I don't know, $1,000, you don't, when you go into a trade, like you just think like, oh, that's I'm just gonna do like 1,000 shares, 10,000 shares, whatever it is, like just like a really flat, clean number, and that's just not how you trade. Trading is about finding exactly where you're going to cut your risk and knowing exactly how much that will equate to in your dollar value that you're willing to accept. And so, like, if you don't have a proper education in that, you'll lose your account like 100% over PDT. Just
So
like
speaking of finding mentors and such, I mean, there's a lot of people out there. There's opinions, on who's good, who's not, who's real, who's not. What do you suggest for like the new person anyway? Like when they're looking for someone to, whether it's a paid or not. Let's just talk about paid because most services that are easier to find are paid. How would you discern the difference?
well, I don't know if I would put it that way, like discerning a difference, but in my opinion, it's about finding somebody that resonates with you and then giving them a shot. Like people are, you're paying for education, and it's the same way as like paying for tuition in college. Like sometimes, I've been through a number of different services, and I've been able to pick up like one or two things from each of them, no matter how scummy they might have been. And I don't think I would have I don't think I would have learned if I didn't go through that process. But I think what really changed it for me was when I've kind of been like avoiding a certain person because their dollar, like the amount I had to pay for it was a little bit much for me. Like I wanted to stay with like, this chat room's like $70 or whatever, like $50. And so because I was staying cheap, like I was getting a cheap education, and I realized that somebody who's willing to like teach you an edge, it's actually going to cost money because like they're teaching you how to make money, and it's kind of invaluable if you think about it, because like whatever you learn, whatever edge you learn, you can use that for the rest of your trading career. That can accumulate like way more dollar value than what you paid for. So in trading, a lot of it is like what you pay for what you get a lot of times, and sometimes you don't. Obviously, like there are certain services that have like a huge ticket price and they don't end up panning out. That's for you to decide. In my opinion, the best thing to do is look for somebody who's like not the best person out there, like not the most marketed person out there, but somebody who has like a good reputation, someone who's maybe not as focused on the marketing aspect of it, or somebody who's proven. Like I don't want to endorse anybody, but there are traders out there who have like audits, or they have people going through their program where they can back test the strategies and not just simply believe what they're told. And I think it's really important for you to find somebody who can actually like explain to you in a way where it's systematic. Like if you had to train like a computer to run their strategy, could it be profitable? And is it systematic in the sense that the entry, there's a signal, the exit is a signal. They teach you risk management principles. And if they go through it and they don't explain any of that, like any of the statistics, the back testing, signals, risk, then they're more than likely a scam, or they're just, I don't like, it's not, they might not be telling you exactly everything that goes into being profitable.
Understand. All right. Well, you know what? I'm curious on if you can think back to a time where it was like a pivotal moment. You had that one moment where it kind of set your mind right, and you now have a max loss with your broker. What's another time that kind of, I know in trading for myself, there's tons of moments where you're just like, oh wow, that's a light bulb. What are a couple that stand out to you?
I mean, I think all traders, they have it like every single week, if not every day, right?
Right.
Depending on how much you lose, you're always learning. I don't know. I think that it doesn't necessarily. When people say like, "Oh, it just clicks for them," I don't think that necessarily happens. I think it's kind of like a process. You just keep developing it. But for me, it was when I started thinking about like what are the basic tenets of trading, and really it comes down to like risk reward, risking a little to make a lot, and understanding the relationship between that. Like I think one of those moments for me, one of the biggest ones was when I input it into like an equity simulator calculator. Like if I compound my account at this rate using this R value, what percentage do I need to be winning to be profitable? What does that equity curve look like ideally? And then like shortchanging that with my own expectations, like, oh, I'm going to make mistakes. I'm going to, I'm going to do something stupid. So maybe if I could grow my account like 200, 300% in like 100 trades, and maybe it'll take me like 300 trades, something like that. But the idea is that once you understand that the higher your risk reward is, the less you need to win. And then once you start experiencing that in your own trading, where you only take trades where they offer high risk reward setups for you, you realize that it's easier than you think to come out ahead green, but you just have to be very patient and very disciplined about not taking setups that don't offer that or forcing it. Because there's plenty of days where I'm in the red initially, but because my risk reward is at least a 3-to-1, like I'm able to wipe out trades. And I think for earlier in this interview, I talked about how, like, even the worst case scenario, let's say that I bag held a stock, and this has happened to me before, where even though I have a max loss, I might have bag held a stock because I'm in that fight or flight freeze mode, and I see the stock going against me. I'm like, I'm going to wait for a pullback. I'm going to wait for a bounce, and then I'm going to get out because I have this big loss and I want to reduce the pain, but it never happens. And then you get out, like, let's say you lose at 6R, which has happened to me before, on a 1R like intended risk position. I can make that. I know in my heart that I can make that back, and even statistically, even more importantly, that I can make that back in like 2 or 3 trades. And so for me, that's like the mental like comeback that I always need. And like I've had months where like somebody who doesn't have risk reward, I can see how they could get completely buried in the fact that like, oh, I need to make this back. How am I going to make this back? This is insurmountable. But when you have risk reward on your side, then you know that it's just an inevitability as long as you follow your rules.
Right, and that's the key. As long as you follow your rules and you follow, your setup that you've shown that's been proven. Mm-hmm. Because it seems like, and I remember when we first met, there was a time where, and I don't know if it's still this way, but where we're way different. Number one is you're comfortable taking, multiple trades and being comfortable taking little, hits here and there and taking losses because overall you're going to be right and your risk reward's such in your favor that it just wipes it out. Whereas myself, I'm more comfortable with the high percentage of chance of being right and a good risk reward, so they don't come often. So I think it's unique how you're able to, sometimes start off red. If I start off red on the day, it could be a struggle for me. It could be a mental struggle, even though I know like the next trade, as long as I wait for it, can wipe that out and some. How are you able to, were you always able to do that? Where you just like, I can take 3 losses, 4 losses, and then 1 win can wipe it out and just have that faith? I'm just curious because that's tough. Even for me to this day, it's something I still work on where I'll have a bad trade, but then I'll wait for my good setup and I'll wipe it out. But during that time, sometimes if I break my discipline, I'll be trying to force new trades. So I'm just curious on how you are able not to force stuff. Just curious on what your thoughts on that.
Yes, well, when I got really serious about risk management, I went really deep into the R multiple ideology, which is you risk a certain amount, you only get out of your stop loss, and you only take your price target. So for me, like, for whatever reason, it was drilled into me. It might synergize well with my own temperament and emotionality. But for me, like, I never had a problem holding for a long period of time, like not taking partials. And so it's always been clear to me that if I wait for my price target, I I'm able to overcome the losses. And but I think overall it really comes down to like using a risk level that you can accept, because when people get into trouble is when their dollar risk that they're stopping out is too much or they can't accept it. That's where it becomes a problem, because for me, like, I started really small and that helped me develop the muscle, so to speak. So 'cause I built a skill where it's like, oh, I can lose $20 here. I don't really care.
Yeah.
It's $20. I would rather see it through to the end than just take a partial, because I want to build the skill that's like required of me to be successful at this. And so if you are unable to do it, then that probably means that you're risking a little bit too much. And you have to get to the point where you can execute on a plan without flaw. And for me, sometimes like my price target doesn't hit, and I'll even retrace back like 2 or 3 or back to a -1. That has happened before. There are ways to deal with that in the future, but for me at the beginning, it was really important that I just stuck to exactly what I wanted to do, what my plan was, because I've seen it like so many times in practice doing that, where I'll cut it prematurely and then the stock will do what I'm doing, what I want it to do, and that would have been a big trade. Or I take a partial profit and it continues to my target. And just from that constant repetition, being able to practice that without fear, and then reviewing on that, seeing like what I did right, what I did wrong, that helped me build that skill. And it's in trading, it's all about developing skill in a systematic and slow way. I mean, you can't really force the market, because we have 5 trading days a week, and no matter how hard you're working, you still have to take 2 days off at least. And so you just have to show up every day and realize that like you don't need to make your money right now. It's mostly important about developing the skill so that it translates forward. Like it will, if you build that skill, it will be with you for the rest of your trading career.
So how'd you deal with because for myself, I'm usually really good at holding for my profit targets, but I say that, but at the same time, like, I'm curious, like, when you were doing that, because this is a challenge for a lot of people. When you're doing that and it gets close, let's say you're risking 10 cents to make 30 cents, just to keep it simple. And it gets to like 25 cents and you see bid stacking, and most of the time, you just see that happening. It's not always real, but you see it happening. How do you prevent yourself from just saying, you know what, let me just take it now? And let me just take it now, or let me just take a quarter, because what if it comes back? And then if it does come back, we all know how frustrating that is. So I'm just curious on how you dealt with that.
Well, in my opinion, you start at the base level, what I just described as building the skill to the point where the money doesn't matter. And then eventually you start developing like an inner skill, which is different levels to your game. So for me, like some different strategies that I've developed over time is like developing a mentality of good enough. Like sometimes if it's within a couple cents of my price target, and I always think to myself, like, is this good enough? Am I going to be greedy for like 2 cents? Is that really what I'm going to do right now? And then that helps me kind of snap out of it, and then I'll take the profit. Like if it's right there and you think that's a high chance of reversing, that's definitely somewhere where you want to like snap out of your greed. Other factors are like just understanding different price action principles, like volume exhaustion. So one of my good friends, Bear from MIC, he taught me a lot about volume exhaustion, which is, it's a concept that's been around. Like Dante and Alex were really, if you haven't seen their webinars from before, I would search that and look it up, because they talk a lot about volume exhaustion. But basically, it's like the points in time where there's a large spike in volume, and generally those points end up reversing it somewhat in the short term. And so like when I see that, I'm more likely to start taking position off, because I when I used to like trade kind of in the same room as Bear, a lot of times I would be holding for the whole move, and then he would say like, oh, I'm covering here. And then for me, that was always like, there was like a huge amount of dread for me, because he was so accurate with it. Like he was always covering the bottom. And so I was thinking to myself, like, oh man, it's going to reverse right now. It's going to be painful. And so like by adopting different strategies like that, I'm able to kind of read more into the price action. But if it's not close to my price target whatsoever, I won't even consider it, because at the end of the day, I won't accept it unless it's like at or near that 3R level. Because if it's not there, then there was no point to even put the trade on. And like statistically, if I'm not taking those high risk reward trades, and it's not going to be profitable in the long run. So I know that.
That makes sense. And just you said they can look up volume exhaustion like on YouTube and find out what that is, so we don't have to dive into that and waste your time.
Yeah, the best resource was ATO9 Alex and DG Trading Dante. They did a couple of webinar series for if you just Google like Alex and Dante webinar, you'll find it. There's a couple episodes.
Okay.
Talk about every single episode.
Perfect. And yeah, I'll make sure if I can find it, I'll put it in the show notes. But really, I don't want to take up too much of your time today, Brian. But what are some ways, if people have questions, they want to reach out to you? What's the best way for them to do that? Because I know you're very open to talking to people and helping people out. So I mean, that's one way we've met. So I'm just curious, what would you prefer them to reach out to you?
It's always better to message me on Twitter, just Twitter at Brian Lee Trades. DM me, send me a message, whatever it is. I'm always responding there. That's the best way for sure.
Perfect. Well, then I'll make sure to put that in the show notes as well. But there you have it. Thanks for Brian. Thanks for being here today. And thanks for giving me some time to talk with you.
Yeah, appreciate it.